Good morning and welcome to Beyond the SEAF model. This is effective for November 11th, 2024. I'm Jack Kosar. Let's get started. SEAF signals for this week. We have technology, financials, and consumer discretionary. Technology replacing industrials from last week. Really starting to see some coalesce in terms of the top rankings here. Technology with a ranking of 4, financials with a ranking of 5, and then consumer discretionary is hanging in there with a ranking of 10, slightly bumping on industrials with 11. In general, as we had mentioned for the previous month or so, the election weighed very heavy on the way sector rotation was operating. We weren't seeing large bets. We had ended up being a 33-day streak in which none of the daily movements in all 11 sector spiders had reached at least a 1% up or a 1% down. That was broken after the election, and to the point where we also had on 11/6, we had a 2.7% increase for one single day. A lot of times if you've been tracking this, I try to give the weekly increase. I believe we're close to 4.5% for this particular week. On average, it's somewhere between down 0.5% to up 1.5%. Really seeing some really strong flows. So again, we're apolitical here. We just understood what the market was doing at the time, and the market liked the results of the election, and we are kind of seeing that as a result. Heading into our heat map. Again, if you watch me, this heat map tells me a lot what's going on, and actually have a comparison from last week's heat map to kind of show you the differential. But we're seeing a lot more deeper greens across all 3 time periods, and those greens are kind of they're clumping together. And when they're clumping together, I know the model is very much tracking the flows, and the flows are acting a little bit more normal. So the hope here is that after the election, with nothing directly looming over the sector space, that things normalize a little bit more. And again, I'm going to bring up the other heat map. So if you look at the heat map from last week, we're seeing a lot of yellows, a lot of light reds, especially in this tactical month. What that's really telling me, there wasn't an accumulation of assets over time. The money, like I had been saying, the money was flowing in for a week, flowing out, flowing in, flowing out. We're seeing a little bit more deeper greens coming in, a lot less yellow on this screen, which means we're seeing the accumulation, as I mentioned. So I just kind of wanted to highlight this is a direct result. We're seeing that nice deep reds at the bottom here. Those are avoids. We really didn't have that going into the election last week. We just money wasn't very sticky, and money is looking a little bit more sticky after this election. So I just wanted to highlight that. The way we read this heat map is not only to show you where the big pops are, right? So, in this case, technology, financials, both over 0.4% increase for net assets on the weekly flow. Again, you watch me a lot. 0.4 is really the number that we're looking here. 2 sectors with over 0.4. We're also picking up some accumulation in financials on the tactical month, as well as the strategic quarter. And then similar with technology, picking up really some deep accumulation here in the strategic quarter, as well as the trading week. So that's nice to see that as that money accumulates more, it becomes a little bit more sticky. We see a little bit less frenetic pace. And again, I'm not predicting the future. I'm not saying that money is sticking in technology, financials, and consumer discretionary for the remainder of the year. But what I'm saying is this chart looks a lot more normal than this chart. This chart screams indecision. This chart screams conviction to me. So I just wanted to kind of highlight that for everybody today. This heat map a little bit more important than on a typical week, because as we broke from convention, this looks a lot more normal than this does. Heading into our rainbow charts, utilities have been a overly favored sector going back to really late April, early May. That trend seems to be over. We're now in a void with utilities, starting to really after going sideways with the relative outperformance for a bit, starting to decline. Utilities is a void for us at the moment. Similar thing with energy. I brought energy up specifically due to the fact that energy ranked 5th on the trading week. And in a normal normal sector environment, we don't necessarily want to bite on these trading weeks. And kind of I mentioned earlier, we want to see that accumulation of assets over time. This is a momentum model, and in order to really project momentum going forward, you need to have an accumulation of assets over several time periods. Energy trading with the trading week of 5. The score for energy was 0.1%, so nothing of super heavy conviction, but positive after having negative outflows on the month and the quarter. As you see here, kind of peaked up into neutral, stuck into a void. So we're in that upper avoid, lower neutral area for this past week. We want to see some accumulation, but the key here is if you take a look at the relative outperformance chart, really nothing happened, right? We've been in this deep relative underperformance trend going back to mid-April. It's been on a decline here. The relative performance versus SPY, a little bit of pickup as we're trying to play into this neutral rank area, but nothing really happening yet. Ideally, want to break this upper resistance here, coming back from late September, early October. That needs to really break. We need to see some sustained time in neutral and a couple of weeks of positive flows to really get ourselves into this neutral favored in order for us to see something happen. Again, we don't like to bite on those weekly flows, especially when we start to see accumulation going on throughout the model. Looking at consumer discretionary is a SEAF signal for this week. That is in the top 3, overall ranking of 10, sitting nice in that middle favored ranking, and seeing some nice relative outperformance here. Breaking this recent resistance that with touch points back in April and late September, early October. Consumer discretionary is looking good. We're heading into the fourth quarter. Consumer discretionary on average tends to do pretty well due to the holidays. Again, we're not projecting or anything of that nature. We do need to see sustained flows and sustained upper rankings in order for this to continue, but things looking very positive for consumer discretionary. Similar for tech. Tech's been a little bit obviously chaotic as we've seen. A lot of upward and downward movement, but moves right up into that upper favored. Seeing a turnaround in that relative outperformance after a little bit of a sideways drift. Overall, in a outperformance trend going back to late August, early September. Financials looking relatively strong. We're seeing some flows. We're seeing some accumulation in the tactical month and the strategic quarter. Ideally, get some sustained time in this upper favored, and hopefully avoid some of this, a little bit less of this choppiness now that the election has cleared and maybe return some normalcy. But overall, the ranking for technology at a 4 overall, really strong numbers, technology leading and looking strong. Healthcare, looking at the reverse things, I tried to show some positives and some negatives, right? So we're seeing some positives in technology and financials, and a little bit of negatives when it comes to healthcare. Healthcare has seen that relative underperformance drop down, deep relative underperformance with really no breaks since end of August, early September. This model, bringing up financials, this model does well kind of on both ends of the spectrum. As you can see here, financials spending some time in this upper favored ranking, seeing a nice broader trend in relative outperformance, as well as a continuation trend here from mid-September, early October. Some positives in financials, some negatives in healthcare. This model does a very good job of telling you places to avoid and places that you should be getting involved in. And again, as I mentioned earlier with the heat map, things are looking a lot more stable when it comes to after the election, just with the way the numbers rolled in post-election, seeing some nice money flow coming in. And again, I'm not predicting the future. This thing could, sector rotation continue to be jumpy as it been for the last 2 months, and it was in the early part of the year. But, ideally looking for some stability. And as of right now, the numbers are showing to me that they're starting to stabilize. So we'll look for that continuation next week when I break down the SEAF model with you all then. Thank you, and everybody have a wonderful week.